Taxes, probably not the most exciting topic to talk about, but so that is what we're going to talk about in this week's video is property taxes. So if you want to know more about paying property taxes here in St. Johns County, stay tuned. I'll try to make it as interesting as possible. All right, let's get started. Okay, if you're new here, my name is Melissa Anderson. I'm your St. Johns County, Florida realtor with eXp Realty. And it is my pleasure to bring you new videos each week all about moving to this area, relocating, living, all of the things so it can help prepare you for your move. Of course, if you have any questions at all, you can find my contact information right here, and it will always be displayed in the description box below. So, as I previously said, we're going to be talking about property taxes. And so two things that kind of brought this up. One, how you can get a discount on your property tax, up to 4% discount. And then two, I recently saw a video on social media and they were talking and they were a first time home buyer and they ended up paying cash for their home. And they didn't realize that when they paid cash for their home and paid taxes in, they would have to continue to pay property tax every year thereafter. So it just made me realize, okay, well, let's just cover this topic. So how this works here at least in St. Johns County, is one, you get a notice, which is called a trim notice. It's a truth in millage, like short for that, notice that is going to say, hey, here's what we're looking at your taxes being for this year. So your trim notice, you'll get that. I want to say it probably goes out in August. Maybe, you should get them all the way up into like September. And that's just giving you a heads up. So let me tell you, once you receive that trim notice, you see anything wrong, if there's an error, you want to dispute it, you have 25 days. So it needs to be postmarked by that 25th day to make any disputes to that trim notice. Okay. So then after you get your trim notice, following up from that, you're going to get your property tax bill. Now, those start becoming due November 1st, but you'll typically receive this October, your bill. Now, if you go ahead and pay your property tax bill in November, the first month that it comes due that you get your bill, you save 4% on your tax bill. And then that just gradually goes down until you get to the month of March, till you're just full. There's no discount, right? So December's 3, January 2, February 1, and then March, no discount. Now, and then of course, if you have not paid your property taxes by April 1st, that following tax year, you will get a 3% penalty fee added to that bill. Okay. So this was just a really quick overview of how all of this works, and we're going to go into a little bit more detail. Okay, so one of the questions, like I mentioned earlier, that I just went over really quickly is, how is the market value of your property determined? And like I mentioned, I'm just looking at some notes here because I want to get it specific, because there are some laws that govern this. So there's the ad valorem assessment process is governed by Florida law. And like I said, market or just value is defined as the most probable sale price for a property in competitive open market involving a willing buyer and seller on January 1st. And again, this is based upon sales of comparable properties and other market-derived data for the previous year. All right, and then just going into further detail, the trim notice or the Truth in Millage Act, that is not your property bill. That is just giving you notice of what your property tax bill could be. And again, this is important to look at. Let me give you another example. I don't think I've mentioned this in a video. So I went to show, and this is why you need to pay attention, because if you have a mortgage on your property taxes get rolled into that, and then they put it in escrow and then it pays it out. And so you may not be paying close attention. And this is why it's important. About a month ago, I went to go show a property. And of course, when I'm researching properties to go show, one of the things I always look at is the tax records. And this home was a 2-2. It was in a 55 plus community. It was a 2-2. And I want to say it was I don't think it was 2,000 square feet. But their property bill was just not commensurate with the property. And so I'm looking further. I'm like, why is their tax bill so high? Well, come to find out, they were paying property taxes. It was listed incorrectly. It was like for close to a 3,000 square foot home that was 4 bedrooms and 2 baths. So they were probably paying double in property taxes than what they should be paying. And again, I mean, if you have your home on the market, you should, when this home was not quite listed. So they were getting ready to list it. It wasn't listed yet, but the property had just expired. They did have it for sale previous to this, and the property expired. So saw the homeowner that got there before my buyers got there, and I said, hey, you really should look into getting this corrected. Like you've been here, what, 3 years now? You are paying probably double in your tax bill than what you should be paying. I don't know if they've corrected it. If they want to sell their house, that's something they need to absolutely do, but just pay attention to that. I mean, I don't know if eventually she'll be able to get that money back that she's been paying for those 3 years with inaccurate records, but we'll see. So, anywho, let me just go over some more stuff here. And then, speaking of property taxes, so say for instance, when you're at closing for your home, they're at the title company, they're going to give you some information about the homestead exemption. And then, of course, as your agent, I'll also give you information on that and also send you a reminder because it's very important for tax savings. So you could save up to $50,000 in taxes by filing for the homestead exemption. And so the easiest way to remember to do that, and this is a little caveat, a little side combo here for this, but the easiest way to do that is if you move to Florida, technically you have 30 days to go get a Florida driver's license. And this, like if you you'll need to get a driver's license within 30 days if you plan on registering to vote, you've enrolled your children into school, homestead exemption, you've accepted employment here, you've resided in Florida for, plan for 6 months, you'll need to get a Florida driver's license. To remember to do your homestead exemption, when you go to get your Florida driver's license within that 30 days, at that same office, you can file for your homestead exemption. Again, up to $50,000 savings on your taxes, which is great. And then also while you're there filing for your homestead exemption, there are some discounts that are allowed. Ask them while you're there what kind of discounts are available. Like say if you were a veteran, certain disability, I don't know what the percentage is. I know 100% for sure. Zero property taxes other than, there's two. There's ad valorem and non-ad valorem. But that's a discount. If you're a widow, again, disability, blind, there's different things. So definitely ask while you're in that office. Another question that comes up a lot is, well, why? I mean, tax records are public. You can go look those up. So, I mean, you can see how much your neighbor, somebody is paying. But for instance, so we can look, see if you have properties that you're looking at, you say, well, hey, how much did they pay on taxes? Just know that's not going to be your tax bill. So it's going to be reassessed once you purchase the home. It's going to be a different tax bill. So, one question that comes up is, oh, we have similar homes. How come their bill is so much cheaper than mine? Well, if you have just recently purchased your home, maybe the other homeowner has lived in there for 10 years, but you have just purchased. So that could be the difference in the tax bill. And then I just want to read this here. So there is a Save Our Homes cap. or non-homestead assessment cap that make it basically not, I mean, you won't be able to compare your taxes with your neighbors as far as if there's a discrepancy. So, for instance, they asked, I'm just going to read this to you so I don't have to. So it says, for example, my neighbor and I have similar homes. Both were built in the same year and sit on similar lots. My neighbor bought his house 10 years ago, and I just purchased my home last year. My estimated tax bill for this year is $5,570, but my neighbor's bill is only $2,460. Is this a mistake? And so this says, not necessarily. The intent of Amendment 10, the Save Our Homes, was to prevent homestead property owners from being taxed out of their homes in the face of rapidly increasing real estate sales prices by allowing for the accumulation of a capped difference over time. This accumulation of a non-taxed value, also known as the Save Our Homes benefit, causes this disparity. So this is the scenario impacting your neighbor's property, mainly due to the fact that they have owned their home for 10 years and yours was recently purchased. So they have enjoyed the benefit of an increasing capped difference over time. It is more appropriate to compare the market values of comparable properties rather than taxes. So I hope that explains that a little bit and makes some sense. So again, if you have any questions, let me know. Otherwise, if you haven't already, go ahead and subscribe to this channel and like this video so I can reach even more people. I would really, really appreciate it. Otherwise, I will see you next week.